Honest. Tell me what song that is. The Honest Company. Yes, they did report earnings. Hey, you know what? Some companies, when they say they're going to report earnings, sometimes they do. And the Honest Company has. Okay, we got to look at these numbers. I'm going to share my perspective on this. I'm going to share with you if I'm buying this stock tomorrow. And if I am buying the stock tomorrow, what price am I looking at for this one? Okay. Yeah, these earnings, they were something else. That's all I'm going to say about that, okay? Obviously, Wall Street's taken these earnings as a very, very positive. The stock is up over 7% after hours here for the Honest Company. All right, guys, so let's get straight into the numbers here. So Honest Company reports third quarter 2021 financial results, 8th consecutive quarter of year-over-year revenue and volume growth. Revenue grew 6% as compared to third quarter 2020 and 47% as compared with third quarter of 2019. Diapers, wipes, skin, and personal care combined for revenue growth of 20% compared to the third quarter of 2020, okay? So if that's all you're looking at, like definitely good earnings, okay? The Honest Company, HNST, a digitally native, mission-driven, brand focus, leading, clean, lifestyle, and movement. When you hear all those words, just understand the millennials love it, okay? And the next generation is going to love this company even more. You just throw enough of those catchy words in there, man, you're doing well for yourself. That's all I'll say about that. But needless to say, the third quarter reflects Honest's strategic investments in its core product categories across diapers, wipes, skin, personal care, with both categories experiencing revenue growth compared to the third quarter 2020 and 2019. Quote, the progress and underlying strength of our business reflects a continued success of our strategic initiatives. This past quarter's results reflect solid execution by our team, delivering growth, increasing market share, accelerating household penetration. I love it when they increase the penetration, and adding incremental omni-channel distribution, said Nick Vlahos, the CEO of Honest. As our entire industry has faced a dynamic operating environment with significant inflationary pressure and supply chain challenges, our solid revenues and gross margin performance continues to show strength of our business as we look to the future. We remain confident in our strategic plan and are focused on executing it with the excellence of delivering long-term shareholder value to further solidify Honest's position with the next generation in a modern CPG company, okay? Boom! Yes, very, very exciting here. Let's look at the some of the highlights here. Revenue growth is 6%, third quarter 2020, right? Those businesses grew 20%. We're going to look into detail in just a moment here, okay? I like to look at the big overarching numbers, and then we'll get into the details. Gross profit at 29.8 mil, which is basically a gross margin of 36%, reflecting strong demand for our product offerings and efficiencies. So basically, as the business gets bigger, you know what happens? They usually bring down the cost of making product. They just find what better ways to do things. As a company gets more and more mature, they scale their business. This is what great companies do. Expanded retail distribution to over 40,000 retail locations in the third quarter of 2021, an increase of 10% as compared to the third quarter of 2020. More good news there. Introduced consumer-centric new marketing, including our lavender nighttime campaign in support for our beauty restage that highlighted the breadth of our skin and personal care line, which is another huge business that I think is going to boom in the future for this company. Increased household penetration at 3.5%, a 10% increase as compared with the third quarter of 2020. More good news there, okay? Now let's start looking at the nitty-gritty details. This is when things get fun for me and we really start breaking the stuff down, okay? So first thing I want to look at here, comparing this company 2021 through 2020, right? The diapers and wipes business is up quite substantially there, from 46 mil to 53 mil. Skin and personal care also up, but this one's up even a much bigger percentage here, from about 19 mil, right? To now we're talking 25 mil plus for skin and personal care. Now, the household and wellness down substantially from almost $12 million in 2020 to 3.4. Why is that? Well, last year at this time, everybody was buying anything soap-related, sanitizer-related from any company that sold sanitizer and soap products, and Honest is a company that also sells soap and sanitizer products. Well, everybody doesn't care about that anymore, okay? No one needs any more dang sanitizer, and, that's just, like, no one needs that anymore, okay? So essentially, like, that they had a huge ramp up in business, right, from 3.7 mil to 11.8 mil. That was a one-off freak event when you're in a once-in-a-100-year health event, and everybody's freaking out and like, I got to get sanitizer, I got to get soap. It benefited Honest for the 1 year, and now that business is completely gone as far as that goes. Now, they will, in my opinion, grow that business over the coming years. It's just, yeah, it's going to take them a while to ever get that particular segment of their business back to where it used to be, okay? Now, if we look at more in depth at these numbers, 2021 versus 2020 change. Diapers and wipes business is up 16% year over year. That's huge. And remember, I think there's going to be a bigger trend that's a multi-year trend that's going to benefit Honest in a massive, massive way. Skin and personal care, over 28% positive change year over year. So basically, their core business is great, right? They had the freak situation last year that helped their, obviously, household and wellness, I think sanitizer and soap business, but that was just a one-off freak thing. The diapers, wipes, skin, personal care businesses are extremely healthy, and this is extremely good news for this company. Even bigger here. Look at this. This is showing you 2021 versus 2019, right? Look at these numbers, guys. Up 38% on a 2-year stack, right? 38% for diapers and wipes. On a 2-year stack, 85% growth in skin and personal care. Those are unbelievably impressive numbers. There's no way you can look at those numbers and not be anything but extremely impressed by the way this brand is growing. The more retailers are getting into, the more distribution they're getting into, and the more relevant this company is to households than ever before. And the household penetration, I think, for this company long term is going to go to 10 to 20% for this company over the coming years. They're at 3.5 right now. Okay, they got a long way to go as far as that. All that. Let's look at some of the more of these numbers in detail here, okay? So if we look at 2021 versus 2020, digital versus retail, right? We're going to see the digital business is down 11% because once again, last year was a once in a 100-year health event, so everybody was ordering a bunch of stuff online. But look at how much the retail side has risen, 28%. So net, you got a 6% total rise in revenues there, which is very, very strong, especially when you had this massive headwind against you, essentially, which was last year, everybody buying the sanitizing and soap products, and that business was being bye-bye, okay? So these numbers are incredibly impressive. You look at the 2021 versus 2019 change, I mean, total revenues up 47% on a 2-year stack. That's incredibly impressive, guys. These numbers are extraordinary. This shows you the management team at this company is performing. That's all I'll say about that. There's no way you can look at these numbers and be anything but extremely impressed. And everybody knew the sanitizer business was going to fall off, right? That's just, it was a 1-year benefit. It was a massive benefit to the company. It helped them out, but it was a 1-year thing. Now, imagine 2022 comps, because 2022 comps, they comp against 2021. So this whole sanitized situation where their business boomed because of sanitizer and soap products, that's going to be a thing of a past, right? Because basically, by the time we got into early 2021, like, that was already a thing of the past, right? And so now this is going to be so much easier of a year to comp against, right? It's going to be so much easier for the company to comp against 2021 numbers than it was 2020 numbers, okay? So needless to say, I'm very, very happy. Now, if we go ahead and look a little more nitty-gritty, let's look at the balance sheet, okay? Balance sheet, you're looking at cash-to-cash equivalents of $27.6 million for this company. Look at the short-term investments, over $62 million in short-term investments. Woohoo, okay? Look at total current assets, $213 million of total current assets. That's versus $49 million of basically total current liabilities. A substantial change. I mean, that's just, incredible. The difference is just flat out phenomenal, okay? Total assets are $274 million versus $94 million in total liabilities. So we're looking at revenue that's incredibly impressive. We're looking at everything across the board is incredibly impressive income statement wise, right? And then we're looking at this balance sheet, which is absolutely phenomenal, and we're getting a stock that is heavily, heavily discounted. And I am very, very excited about this one, especially being that they're a company that, regardless of whether it's boom times or bad times, is a company that's going to be absolutely very, very successful. Okay. The leadership at this company, remember, this is a no joke as holy smokers leadership team, okay? If you didn't know, Jessica Alba is actually not even really technically part of the leadership team, although she's very important to the company and kind of the vision, and I think she's brilliant from a marketing perspective, and I think it's great to still have her attached to the brand. I love that, okay? But the management team's their own deal in terms of making the day-to-day decision, and Nick Vlahos has done nothing but a phenomenal job turning this company around. The company was not in the best place when he, first joined in the first year or two, and he's done a phenomenal job of really turning this business for the better, getting them out of, some problems they had, because this company had a several $billion valuation many years ago. It was a fast growth company, and then they ran into a bunch of troubles in it was almost like 2015, 2016-ish, somewhere around there. And the company went through a whole rough stage, and Nick obviously started helping the company come out of that over the coming years, and he's just done a phenomenal job. And he brought over a lot of folks from the Clorox company that are they know what they're doing in this sort of business, and they know how to get into more and more retailers, they know how to get SKU expansion, and they know how to build a very, very strong brand, okay? So as far as me with the leadership team of this company, extremely thrilled and extremely happy with them, okay? Now, obviously after hours, like I said, the stock's up over 7%. Now, am I buying the stock tomorrow? All right, so here's the deal. If I can get shares, and I'm awake during that time period, if I'm awake and I can get shares for less than $10, yes, I will be buying the stock. And I don't usually buy a stock if it goes up big on earnings, but I'm just so dang happy with these earnings, and I'm so thrilled with the numbers they're putting up and the growth on a year-over-year basis and on a 2-year stack. It's incredible. And the way the balance sheet's at and the way I see them building out this brand, yeah, I'll actually be a rare buyer if the stock is up tomorrow. And I don't usually do that. If you guys know, I like to buy it when it's going down, right now when it's going up. But yeah, if I can get shares under 10 and I'm awake tomorrow, I will get those shares, okay? Now, if the stock is $10.50, I'll consider buying more shares of the stock. The hard thing for me is I've been buying a whole lot of shares at 8 and 9, so if also I have to pay 10 plus. But at the end of the day, I look at the stock. It's a $20+ stock a few years from now, if not a $30+ stock. And so I'm kind of looking at it and I'm like, it's fairly easy money with very, very low risk, because I feel like in a recession environment, it's an extremely low risk. And so for those reasons, it's actually rather attractive. So I will likely be buying the Honest Company. So let's be honest. She likes me, she likes me. What song is that? Okay. Anyways, guys, hope you enjoyed this. As always, extremely happy about these earnings. If you didn't know, we got a massive Black Friday sale coming for the private stock group. If you want to get notified as soon as that deal drops, check out pinned comment down there. Much love and have a great day.